So this is the second part of tax. In this video we are going to talk about the remaining concepts of tax. In the previous video a few things were remaining, so I'm just gonna finish that and then we'll move on to subsidy. Okay, the discussion on subsidy is pretty much symmetric to tax, so I'll quickly go through that and then we'll end this chapter. So let me draw the graph now. This is quantity, this is price, this is our demand curve, this is our supply curve. Okay, now if you remember from the previous videos, what is the consumer surplus? Wait, before that let me draw these curves again. Okay, so what is the consumer surplus and what is the producer surplus? So this is our equilibrium, right? This is our equilibrium. So the consumer surplus is the area under demand curve and the equilibrium price, right? So this whole triangle is the consumer surplus. And what is producer surplus? So the area under the supply curve and the equilibrium price is the producer surplus. Okay, so this is the producer surplus. Now let's say there is tax wage. So let's say this is the tax wage. Okay, so this is tax. Now what is the price paid by the buyers? So this is the price paid by buyers, right? And what is the price received by sellers? So this is the price received by sellers. All right, so now my question is, what is consumer surplus and what is producer surplus? So you know that consumer surplus is the area under demand curve and the effective price paid by buyers. So this is the price paid by buyers and this is the demand curve. So this small triangle is the consumer surplus when there is the tax wage. All right, now what is producer surplus? So the area under supply curve and the effective price received by sellers. So this is the price received by sellers. So this small triangle is the producer surplus. Now what is this bigger rectangle? Okay, let me highlight this with different color. Now what is this bigger rectangle? So this is tax revenue. This is tax revenue. What is tax revenue? The tax revenue is nothing but tax times quantity. Okay, so this is our quantity. All right, this whole thing is our quantity and this is our tax. So tax times quantity is tax revenue. Now what is this remaining triangle? What is this triangle? So this triangle is nothing but deadweight loss. Okay, so this is deadweight loss. So no one is going to get this area. Okay, So whenever there is the tax, we have different types of consumer surplus and producer surplus, and there is also tax revenue and deadweight loss. All right. Now you can analyze how deadweight loss will change when the demand and supply curves are more elastic or less elastic. Okay. So now you can imagine this in your mind, that whenever the supply curve or demand curve is more elastic, the tax weights will shift to the left, right? And this will increase the deadweight loss. Okay. So let me write the remarks. Deadweight loss will increase when demand curve or supply curve is more elastic. All right. Okay, so this is all about tax. Now let's move on to subsidy. So what is subsidy? So subsidy is price received by sellers minus price paid by buyers. Price paid by buyers. And again, similar to tax, we have two remarks, that who gets the subsidy does not depend on who receives the check from the government. Who gets the subsidy, that is whoever we subsidize, it does not depend. Does not depend on who receives the check from the government. Who receives the check from government. Like we saw in the tax that whoever we taxed, the burden will be shared, among the buyers and sellers. So it does not matter. Now, who benefits from the subsidy does depend on the relative elasticities of demand and supply, similar to tax. So, who benefits from the subsidy does depend on the relative elasticities. Relative elasticities of demand and supply. Okay. Let me draw a new graph. This is demand curve. This is supply curve. Okay. So let's say this is our subsidy. Okay. And we call this subsidy ways, like similar to tax, we call this subsidy ways. So subsidy ways. Now here, what is the price received by sellers? So this is the price received by sellers. This is the price received by sellers. Now what is the price paid by buyers? So this is the price paid by buyers. All right. Now again, the percentage of subsidy that the buyers will receive is again same as the percentage tax burden on buyers. Okay, so we'll use the same formula. All right, let me write one formula here. So the percentage subsidy buyers receive, it's same as percentage tax burden on buyers. Okay, we'll use the same formula, that is elasticity of supply divided by the elasticity of supply plus absolute of elasticity of demand, or we can write this in the slope form, absolute value of the slope of demand curve divided by absolute value of slope of demand curve plus slope of supply curve. All right, so these formulas are same. Okay, now again, from this graph, my question is, okay, let me draw the demand and supply curve again. So this is our demand curve and this is our supply curve. Okay, so now my question is, okay, oh, wait, let's say this is subsidy ways. This is subsidy ways. Now my question is, what is consumer surplus? So the consumer surplus is the area under demand curve and the effective price paid by the buyers, right? So what is the price paid by the buyers? So this is the price paid by the buyers, right? This is the price paid by buyers. So this whole area is going to be our consumer surplus. All right, now what is producer surplus? So producer surplus is the area under the supply curve and the effective price received by sellers. So this is the price received by sellers, right? So this whole area is going to be our producer surplus. All right, now my question is, what is total welfare to the society? Total welfare to the society. So total welfare is consumer surplus plus producer surplus minus subsidy expenditure. We need to subtract the subsidy expenditure. So from this graph, can you tell me what is subsidy expenditure? So similar to tax, subsidy expenditure is subsidy times the amount. So this is the subsidy, all right, and this thing is the amount. Okay, so this is the amount. So this area, the whole rectangle, okay, let me show you. So this whole rectangle, this bigger rectangle is the subsidy expenditure. All right, so this is subsidy expenditure. Okay, let me delete this so that I can show you some more things. Okay, so how do we calculate the total welfare? Let's say this is A, this is B, and this is C, D, E, and F. So what is consumer surplus? So consumer surplus is A plus B plus E, right? And what is producer surplus? So this is C plus B plus D. Now what is subsidy expenditure? So this is B plus D plus F plus E, right? Okay. So now here we can cancel a few terms. We can cancel B. Okay. We can cancel D. Similarly, we can cancel E. Okay. So what are the remaining terms? So this is A plus C plus B minus F, right? So what is this? A plus C plus B. So A plus B plus C. This is nothing but the total economic surplus before, subsidy. All right. So this whole triangle is the total economic surplus before subsidy. And what is this F? It's a small triangle. So this small triangle is the deadweight loss created by the subsidy, similar to tax. So this is the deadweight loss created by the subsidy. So you are basically subtracting deadweight loss from the total economic surplus before subsidy. All right. So this is our total welfare to the society. Okay, so this is all about subsidy. We are done with this chapter now. We have finished tax and subsidy. From the next videos, I'll do a lot of questions based on the concepts that we have learned so far, in the previous videos. Okay, so that's it for this video. Thank you so much for watching.